Bitcoin has broken below major support. Ethereum holding on with both hands and its teeth at the $3,000 level. Altcoins, well, they're simply just bleeding out. Fear and greed. Well, we went from extreme greed to fear in under 2 months. It's the lowest reading since the Terra Luna collapse in 2022. Everyone thinks that the cycle is dead, but what if it isn't dead and it's just actually recycling, as I said yesterday? Let's break it all down. Welcome back, Crypto Crew. It is your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And of course, come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we're crypto maniacs. All right, let's get right into it. All right, now, I'm going to be discussing some things today that they're cool to me, okay? Because I'm an old world trader. I've been around for, unfortunately, more years than I'd like to admit, but I've been doing this for over 30 years. I started my trading career back in 1988. Probably you weren't even a glimmer in your parents' eye. They were probably teenagers at the time, or perhaps not even born. I have no idea. But really, I've been around a long time. Now, full transparency, full transparency. I have never been a fan of moving averages. Never. Okay, I'm a price action trader. Listen. I tried moving averages in the beginning of my career, like because everybody, I believe the wives' tales about moving averages, right? You read the books; they all talk about moving averages. Like the price is above the 20, and then now it's above the 50 and the 100. But I've always seen every time I've taken trades off of moving averages, I've gotten shellacked. I mean, I'm really because okay. So the style of trader that I am, I'm more of a short term, quick hit guy than I am of a long pull trader. That's just my personality. I'd rather go into the marketplace daily and take out $1,000, $1,500. Sometimes you do really great, get 3,000 out of it. Wonderful. Okay. I don't trade extremely large. I'm a conservative trader in that respect. There's a lot of guys out there that are my age that they want to hit the cover off the ball. I don't want to do that anymore because I know that where I am in life. I can't just go and take a massive hit because trading, okay, it's a game of probabilities. I can't control what the marketplace does, and neither can you. All right, so I'm going off into this ramp because I'm going to get into the 50-week smooth moving average, and I want to talk about it. So, full transparency, I'm not like a real big believer in moving averages. Now, however, I know you guys are, and you guys follow them, and so I understand them completely. So I can, tell you guys what we're seeing as far as like the moving averages are concerned. But as a trader, I'm a price action trader. So if you notice, every time I do a chart, basically I'm talking about price points. I'm not talking about anything else other than price, because price is the ultimate judge, jury, and it is everything in a marketplace. Because price determines pain points. Price also determines euphoria. It's nothing else that does it, right? So we're going to get into it. So now let's start with Bitcoin, because Bitcoin is where the storm has hit the hardest so far. Dropped below 90,000, printed fresh multi-month lows. Traders are calling it, a sign of a sour mood. That was actually one of my old one of my old friends that is still in a bank. Actually, I talked to him just earlier this morning. He's like, Bitcoin is in just a sour and dire mood. It's just it's still bearish. Yes, it is still bearish. But they're calling it a sour mood. Well, one trader that I know did. He's a very big bank. And liquidity across the board is thinning. That is a direct quote from my friend Joe. But anyway, so we got a textbook playbook. It printed the clean head and shoulders pattern. We talked about this. The bearish retest was confirmed. Target 90,000 hit already. Okay. Pattern traders, they made a fortune off of it. Congratulations to them. really great. You know, had people calling it saying, Tom, you're going to be singing. You're going to be singing. I didn't actually believe it. I said this yesterday. I didn't think we were breaking below. I said 95, but really in my mind, I didn't think we were breaking below 93. I thought we were going to touch the CME market gap at the 97, but I didn't think we were going to fill the 92.5. Okay, congratulations. Thank God stop losses are deployed on, Tom's trading desk at all times. Now, yeah, did I take a shot at buying Bitcoin in those areas? I did. There was some good, decent movements up, but nothing like I thought was going to happen. What I thought was going to happen was we were going to quickly fall in to the 97. Where is it? Do I have that damn chart up? Let me see something. Hang on here, right here. Yeah, okay. I thought we were going to quickly fall into the 97 and pop. I thought we were going to pop right back up to 102. Then I can get a new look, and that didn't happen at all, man. I mean, that just, it was there wasn't even a dead cat bounce there, right? I mean, if you were trading this stuff, it was just like straight, yours, sell it, yours, yours, yours. They were just hitting bids like crazy, right? In Forex, we had two terms to determine whether or not to buy something or sell something. Yours was a sell and mine was a buy. So there were absolutely no bids. So it was a complete yours, yours, yours all the way down. Matter of fact, as a young trader, like when you first start learning the terminology of Wall Street or Forex, trading, you could always tell a new trader because he'd be at dinner and like somebody would say, "Would you like to have this?" He'd be like, "Yours." So you go, "Oh my God, the guy just started in Forex," because everybody did it. It was like a rite of passage. You're out to dinner, everybody's screaming yours and mine. A beautiful woman would pass by and everybody would scream mine. Like not good, not good. Okay, male chauvinistic. But anyway, so I was wrong with that. Now, I really didn't think we were going to fall into the 92. Oh, we did, and we went down deeper. Where did we go down to? Like 89 something? And I said I don't like that. 89,330, say. 89,400. I said I didn't like it. Talked about it yesterday. I said because it broke a very, very important level for me, a price level, which is right at 91,231. And I explained why. The 91,231 happened way back in February of this year, and we bounced off of it. But once we broke through it again, we went down to the low of 74,000. So that point is a very, very important point that we're playing with right now. Now, since we broke it, I think that we can go lower. Okay, and that's what I'm just saying. Now, there are some things that are pointing that Bitcoin is the top. For me, the top is not in, and I'm going to explain the reasoning why I think that the top is not in. But as I'm drifting all around, I'm trying to stick to like my points. Of course, I don't, because that's just the way I am. But anyway, so Bitcoin broke the structure. When it broke 106 and the bulls cannot get above 106, we knew we were heading into that bearish head and shoulders. We had the ghost in the machine that was haunting us for quite a while. That was that double top that we said, and that I was like, looking at, hoping, hope is not a strategy, was thinking that we could actually get back up to the like 116, break the 116 and kind of create, some market chop between 118 and 109 before we could attempt the top again. This is what happens when you forecast. Right? Forecasting is, it's not a science. You're looking at it. You need certain things to happen. But the most important thing you have to remember, mindset wise, is don't believe your own hype. All right. And, when I was first learning technical analysis, and I was actually learning from some really good old time traders. The first thing they told me was like, what we're doing here is not a science, right? It's kind of an art form plus a little bit of science. It's mostly an art. But the most important thing you have to remember is that if your analysis is telling you one thing and the market's doing another thing, that's a very, very important piece of information, because the market is always right. It's never wrong. So keep that in mind. So if you do an analysis and you're saying, okay, this level should hold, and all of a sudden it's not holding, well, that's a very important piece of information, and you should go with what the marketplace is telling you. Now, not immediately. You must say, for instance, it's a support point. It should be holding. It's popping through, but it's rebouncing back up. You should look to sell the bounce up because it broke your level. So most likely, your level's wrong, and the market wants to go lower. The market always is correct. So anyway, so as we talk about this, and I don't want to spend too much time because people complain. It's well, I'm already 10 minutes in. I haven't even done any short-term analysis yet. But as it stands, the setup we're seeing right now is still kind of heavy sales. Okay, it's still kind of bearish, but your mindset doesn't have to be. Okay, most are going to panic at the lower levels, but it's not time to panic. It's actually time to like regroup and figure out how we're going to handle this, because there's a lot of good, like, bright signs for Bitcoin in the future, but we can't trade the future, right? We can't trade it. That's why I suggest you get into our pro trading group. I'll show you how to do that in a little while, because we'll navigate through this together. All right. Now, let's get into the 2 hour time frame. Let's do the chart work real fast. All right. So, most important level we got right here is 91,275. Okay. We popped it a few times. We went a nice deep run down to here to 89,253. Mingia. All right. So, marketplace re-rallies up. I shouldn't have said that word. That's not a good word in Italian. But anyway, marketplace re-rallies to 93. We said that we had to get above, actually, this level, and we could not do it. So the marketplace came right up to the resistance and bang back down. Now, the one good sign that's happening right now is we have not broken deeper. So right now we got the low, we got the high, we got a slightly higher low. We got to see if we can come up and break through the 94,000. Now, there are liquidity pools, huge liquidity up top. Okay, I'm going to show you that right now. We got to look at that too. We got to be realists, right? So we don't only want to talk about hopium, right? We want to actually talk about true analysis, right? So let's go. I'm going to show you that right now. Look at this massive liquidity right at the 100,000 level. Now, all of a sudden, because if you really look at the fear and greed index, I mean, this is insanity, right? Look where we are, right? I mean, as I said, we went from extreme fear, we went extreme greed to extreme fear in like what, 2 months? I mean, it's insanity. But that's trading, right? So here we are right now. We got massive. Everybody wants to get out now at 100,000. Okay, there's been buy side liquidity sweeps all along the bottom, and it's still the marketplace is still heavy. Okay, it's still heavy. All right, now the only way that we could get out of the heaviness of the marketplace, in all reality, is if we get above this 90, it's a 2 hour chart, so I'm sorry. We get above right around 98,000, 99,000. It's not going to be first time, because of all that liquidity up there. People are going to be front running and selling that thing. So it's going to be pops back down. However, that's the point that we have to watch the marketplace for higher lows occurring. Because if we could get that, means more people are coming in, more institutions are coming in, because the big boys are still hanging out. They're still hanging out. I told you got to keep your eye on that IBIT stuff, and IBIT itself. Look where it is. It's at 52, main support at 50. We got to get back above 55 to show any type of like Bitcoin like rejuvenation. But it's chopping around. Okay, so IBIT's chopping around. We also talked about the NDQ, right? So this is still in play. We talked about this before, but all right, let's go back into the short term. Okay, so got to get above 98. Can't. All right, if we actually break down through this low, we have support coming in only at 84,000. After that, it's 82,000. Then it opens up 78,000. Now, are we going to go low? Honestly, I have no idea. I don't. I'm not going to lie and say, no, we'll never go. I don't know. All I know is that I got to watch price action in the short term to determine which way it goes. And the best way to do that is you can get into our free group. Now, look, we've got some really good wins in there. Okay, just recently, the boys bought it at 90. They sold it at 93. They've been playing around short and long constantly in there. You're gonna want to get in there. They're a good bunch of guys. So we've seen the entire crypto market shed over $1 trillion in 6 weeks. This is not normal bloody selling. This is a liquidity vacuum. That's what occurred here when we talked about these damn points. Where are they? Right there. the CME market caps. They were a liquidity vacuum. Now, when we were at 120, 120,000, there was no real reason to talk about them. I thought we were clear of these things. One guy, one little wise guy on our YouTube, one of our subscribers goes, "Yeah, Tom, there's also a liquidity gap at 21,000." Yeah, there is. A CME market cap, 21,000. Okay, he's basically a huge bear. Congratulations, congratulations. If it goes there, I don't know, man. That means this whole thing was like a Ponzi scheme, from the beginning. It's like, but I don't. I honestly don't think we'll even go near there. But hey, as a trader, who knows? Who knows? But what's driving the move right now? Well, rate cut expectations have faded, right? Risk off across the board. Global tech, tech stocks. Liquidity drying up. Derivatives unwind. Okay, ETF outflows, that stupid IBIT, and all the other flows, right? Broad macro fear, as you can know, with the fear and greed. All right, now, I would consider this a compression phase. Heavy selling, very weak buying, and a shrinking order book. That's how I would look at this. But, if we come, we're big Wyckoff traders. So we know that we are deep into phase E right here. And Wyckoff nailed it. He's always been screaming from the grave. We're in full markdown mode right now. Panic, capitulation. There's going to be final shakeouts. It's not to say that we're turning up from here. We're not. Okay, but you gotta, you gotta first. Don't over leverage yourself, and don't try to be a hero. Don't try to take stabs at Bitcoin like, oh, I'm going to just buy everything at this point. Don't. Because the market is going to, it's like a heat-seeking missile. It's going to seek you out and destroy you. That's just the way it is. Trade with your head and not over it. Okay, so when retail sells, we're watching. I'm watching BlackRock. I'm watching Fidelity. I'm watching Vanguard, because that's where they start to reload. They want your liquidity. That's what they want. Every cycle ends the same. This time, we got to choose the winning side, back and forth, constantly. And as I showed you, there's walls of liquidity way up above. You gotta watch this. That's for sure. There's massive liquidity around, so we got to trade through it. All right, now let's talk about fear and greed. All right, I don't really want to go long because, like I said, I know guys complain that it's long, but in less than 2 months, the fear and greed index went from elevated greed to extreme fear. It's the lowest it's been since the Terra Luna wipeout in 2022. It stinks. But there's a silver lining to all of it. Historically, once sentiment hits rock bottom, you can only go up from there, right? When you're at the bottom, you can only go up. But that doesn't mean, it's going to happen immediately. It's not. Markets just don't turn when we want them to turn, right? But we rarely spend more than 1 month in extreme fear. Now, we entered this zone on November 10th. If we're looking historically, it's like we're likely 2 to 3 weeks away from an exit of this. So that means we're in for some more pain. Historically, that's what the market's saying. Now, going from extremely fearful to fearful isn't exactly bullish fireworks, right? We're extreme fear and we go to fearful, it's not going to be a bull firework, scenario, right? But low sentiment does not erase medium-term upside. We have to remember that. Now I'm combining two time factors here. I'm talking short term, we're in for some more chop. Long term, medium term, okay? It's not changing the medium term outlook that we have. Now, I'm going to go, if we look back, all right, I did this and on the fear and greed index. If you look back at 2021, the most media-driven bull market in crypto history, everyone forgets that from May to July of 2021, the market lived in fear and extreme fear. Then Bitcoin doubled in 3 to 4 months. It printed all-time new highs. So fear does not kill the cycles. You know what kills the cycles? Liquidity. Liquidity kills the cycles. That's what does it, not fear. Okay? Because the market's going to do what the market's going to do. People are going to psychologically do what people do. and they always sell at the worst possible time. And if you're honest with yourself, and I'm honest with myself, there are times that I've done that I've sold the exact low tick, only had the thing rip roar in my face. It's happened to me. I've been doing this 30 years. It's happening more times than I care to say. But I've done it, I've done it. It's a knee-jerk reaction. Now, I wanted to go back to this chart here, and I want to open this chart up. So let me open it up and let me get it to where it's got to be. Now, let's talk about this 50-week smooth moving average. As I said in the open, I'm not a big believer in moving averages. Okay, that's just me. I like price. Okay, now, the 50-week smooth moving average, we closed below it on the weekly chart this past Sunday. It's not a deal. It's not ideal at all. Multiple closes below are technically worse. But the indicator is not a death sentence. History shows both outcomes of being below this thing. Okay, now I'm looking back here, 2020, right? Bitcoin spent 2 months below the 50-week smooth moving average and then 16x'd. All right, now Bitcoin, okay, in 2021 closed below and then ripped to all-time highs, right? 2022 closed below, and that was right here the end of the bull run, and it did this. Boop. I don't want to take that away, but that's what happened. We got into a bear market. So what gives? Why does this signal a bull, revival sometimes and doom like that one other time? Why? Well, it's back to the old saying I just said, liquidity. So we're looking at a close below the 50-week smooth moving average this past Sunday. Just like fear and greed bottom, it's not great, but it's not a death sentence. And historically, all-time new highs are absolutely on the table in the medium term. So the difference between the bullish outcome and the bearish ones, one word, as I said, liquidity. Liquidity. Now, I'm going to just bring my bear down because this was your bear marketplace. And then all of a sudden we pop back up and we're coming up to where we are today. Huge movement up. Okay, now we're back below the 50-week again. Okay, as I just showed you, we've been there before. But the difference between bullish outcome, bearish, what? Liquidity. 2021, we had a metric ton of new money injected into the global economy. We had stimulus checks. We had zero rates at the time. We had M2 expansion. We had record consumer liquidity. People were swimming in money. Okay? And 2022, liquidity evaporated. And when people have extra money, some of it flows into crypto. And when they don't, they take the money out. That's just the way it goes. So now, what does 2026 look like for us? Honestly, it's stronger than most people expect. Here's why. Let's talk about it. And we talked about it before. We got rate cuts definitely coming. Tariff stimulus checks starting if we get the circulation of $2,000 for every person. More tariff money. Government workers are getting back pay. Market Structure Bill and Clarity Act potentially unlocking institutional U.S. capital. Global credit impulse rising. Fiscal expansion for sure. Consumer liquidity starting to improve. So 2026 is shaping up to be a liquidity positive year. And liquidity drives crypto cycles, not vibes. Not the vibes, not the fear, not the greed. Liquidity. Now, if we look, I'm going to show you this post right here. These guys are awesome. Kobesi newsletter right here. U.S. preparing $2,000 stimulus checks. Japan preparing $110 billion stimulus package. China approved $1.4 trillion stimulus package. Fed is officially ending quantitative tightening on December 1st. The U.S. is issuing $1.9 trillion in treasuries per year. Canada is restarting its quantitative easing program. Global M2 money supply is at a record 137 trillion. Global rate cuts are 320 plus over the last 24 months. Now, he's actually right, because after this big movement comes, and liquidity comes in and Bitcoin rallies huge, maybe up at 150, 180,000, there's the inflation wave that could hit, that could crack Bitcoin back down to, you know, 110, 90,000 again. Okay, so this is lining up to be incredible, incredible. All right, so there's my case for the 50-week moving average. Please tell me what you think about it. And let's just get into Ethereum, all right? Because I'm running late. It's already 25 minutes in. Ethereum breakdown right now. Ethereum, if we look at it, it's holding on with both hands in its teeth. It's following Bitcoin, but it's holding the $3,000 level and the 2,800 level, right? So Ethereum is hitting a multi-month low right now as liquidity is evaporating, but it's not continuing to fall. So if you look at Ethereum overall, okay, Ethereum in 2020 dumped 38%. 2025, it's just dumped 38% again. We got the same fear, we got the same pattern. The last time it triggered a breakout of the decade. This time, don't sleep on it. I mean, get into our pro group. We'll help you out with Ethereum. We have positions in it, short and long. We're playing both sides of the marketplace right now. But here's the nuance. Ethereum usually leads recoveries. It responds faster to liquidity injections, tech flows, and macro optimism. So short-term pain, yes, yes. Medium term, Ethereum tends to outperform once things stabilize. Now we got to keep watching that damn Bitcoin dominance. But right now, if we look at Ethereum, and we got a still major play, I know we're dipping back into the cone, the breakout. We're looking for the break back above, 3,500, and then we could send Ethereum. Okay, we need to recover over 3,500. We need to hold the 2,800 level, or else we're going to be digging deeper to 26, 2,500. Okay, but now it's a bullish pennant, all right, and it's there's tightly monthly compression, and once we break out of this thing, it's not going to be it won't be a slow grind. Once we get out of it, it's going to be a quick move. It'll be violent and vertical. Now, okay, so how do you get into this free pro group I keep talking about? Let me take you over. I'll show you. The link is in the description. You click this link right there, you'll be taken over to our pro group, whereas we got insane trading setups for you. Everyday breakouts, reversals, long-term gems, you name it. Now, we have two outstanding brokers to choose from what offer really incredible bonuses for you through our link. You got WeX, low fees, fast execution. All right, what do they do for you? Well, they're going to give you no fees for life. You got BTCC, also low fees, fast execution. They're giving a $500 giveaway. So small account, you got $1,000. They just give you a 50% increase. That's pretty good, right? But really, what I suggest is you come on over and you trade with us directly. Okay, we'll stack the stories together, we'll trade together, we'll help each other out. It's a great place to be. All right, so let's get on over to Bitcoin dominance. All right, so let's look at Bitcoin dominance. This thing is unbelievable. All right, still at the same price. With Bitcoin dominance this high, altcoins are still going to bleed. Okay, that's for sure. So, if you look at the chart, 2017 we had a crash down. Okay, 2021 we had a crash down. 2025 we got the same setup. Once the dominance peaks and we start breaking down, altcoin start to move and they start to get stronger. But right now, the clock is ticking. It's not happening right now. I mean, so the signal is never missed. It's going to take time because this is a monthly clock. All right, so we got to be patient with it. So right now, altcoins are getting obliterated. They're just getting crushed right now. Everything is in the red. When Bitcoin and Ethereum both lose support, especially with thinning liquidity, alts become collateral damage across the board. Now, we're seeing 90 to 95% of all alts are in the red. There's no rotation. There's no bid depth. There's nothing there. Liquidity fragmentation's over. It's not an alt season environment. It's a capital preservation environment. So you got to pick the right ones. You got to pick the right utility coins. Okay. Now we know altcoins always chop before they fly, and this is going to be a heavy chop. There's no doubt about it. There's a lot of wind resistance happening right now with Bitcoin and Ethereum. So they're always dipped before they move higher. And we know that every green box was the start of a new alt season. Now, do we have glimmers of it? Not yet, really. Okay, so again, you got to pick the right coins, and that's why I say, think about joining our pro group. But anyway, because we have some good eyes on some decent coins. So that's been the breakdown for you. I'm coming in at 30 minutes. I want to be a little bit short of that, but make sure that you come on over to X, follow us on X. Bitcoin is down, but it's not out. We're looking at a medium term. We're seeing that we could see a big movement upward. Ethereum under pressure, that's for sure, man. Ethereum is holding tight, though, right at $3,000. That 2,800 is a very, very important support level. Alts are bleeding out. Got to pick the right ones. The macro cycle may not be ending. It may be restarting. Sediment bottoms and SMA resets and incoming liquidity. That's how the reversals begin. So make sure you come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day. So what do you got to do? Well, you got to trade with your head, not over it. You definitely have to do your own research. As you know, I am not a financial advisor. I am a trader just like you. All right. What else you got to do? Well, you got to think about joining our pro group. It doesn't cost anything. It's free. It's free. Okay. What else you have to do? Well, as a short-term trader, you got to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.